Today's guest is Adrian Wall, Senior Director of U.S. Policy at Tron and Managing Director of the Digital Sovereignty Alliance. Adrian has spent years working at the intersection of crypto policy, blockchain education, and government affairs, advising on major legislation, including the Genius and Clarity Acts. Adrian, welcome to the show.
Thank you very much. It's great to be here.
Welcome.
Welcome. We're going to start with our signature question, which you may have already heard, but it is, what does crypto in America mean to you?
Big fan of the show, so I was kind of expecting this one. So to me, crypto in America, to me, it equals financial democracy. Just that simple. Crypto in America is financial democracy. But what I really mean is, access to money, markets, and financial opportunity. It should not depend on the zip code you were born in, shouldn't depend on your race, your religion, creed, any of those things, or where your parents come from, or whether our traditional financial system grants you permission to participate. So for me, financial democracy is really talking about that financial freedom and American innovation that comes along with it. But also, it doesn't mean financial anarchy, right? We need to have clear rules, strong ethics, consumer protection, accountability for fraud. All those things are baked into what I say financial democracy. And then, of course, that's why clarity and market structure and the Genius Act and all the regulations that are related to crypto are really important, because ultimately those things are going to underpin whether or not America is still on the forefront of innovation and is free enough to grow, responsible enough to earn that trust, and clear enough to allow this industry to flourish.
Yeah, maybe your answer here will kind of weave into the question I have for you next, but you are what one may call a crypto policy wonk. You've been in the space for a while, but where did the journey into digital assets really start for you? Did it have to tie back to that financial freedom aspect, or was it something else that led you into it?
It's both the financial freedom aspect. So from a moral standpoint and ethical standpoint, that was a huge reason why I got so interested in digital assets and really blockchain technology before that in 2015, thereabouts. By background, I'm an economist, and in my undergrad years, I did a lot of work on markets and currency and what makes currency, what defines a currency. And there's so many interesting examples, and I'm sure you've had guests on your podcast talk about back when shells were currency, back when rocks were currency, and what were the things that underpinned the value, and people in society all agreed what that was. So then fast forward to when digital assets started coming on the scene, it was too fascinating for me to resist. And I had been in private equity my entire career, so traditional finance, banking before that. So I had a grounding in sort of traditional finance application and what finance is used for, but combining that with what I thought was the frontier of where currency could go. And then when I started thinking about the banking, the unbanked aspect of it, and you start seeing that adoption, especially in the developing world, right, much faster than us. That's when it clicked for me that, okay, this stuff is not just a nice to have, not just a cool thing that might be the future of where money goes. It's an existential situation for so many people around the world. And that's when I started to unpack the democratic side of digital assets and blockchain technology, et cetera. And now you bring AI into it. I mean, the sky's the limit. The future, I think, is incredibly exciting for this.
Do you find that your past experience in traditional finance has translated a lot into the work that you're doing today?
Absolutely. So Digital Sovereignty Alliance is the nonprofit that I founded in DC in the fall of 2024. And my background in traditional finance naturally lent me to explaining these complex topics to those in that industry. So I think you have amazing professionals in Washington who are policy wonks like myself, but they tend to be either facing directly at legislators or other industry professionals for the most part. And I found myself talking to payment professionals in the traditional banking world because nobody was talking to them. And they were so hungry for anybody to help them explain these things. So back when I first started, I remember I was speaking at a conference in Dallas called Payment Innovation Alliance, and it's a subset of NACHA, which is the National ACH Alliance. And they had asked me to join a panel to talk about digital assets, stablecoin in particular. And so you ask the question, what is a stablecoin? Payment stablecoin. And nobody knew, literally not a single person. And these are people who are, not to cast any shade on them, they are at the front lines of traditional banking and finance, but no one had bothered to explain it to them. And it can be, look, it can be intimidating. If you're not in this from a young age, you feel like the terminology and the technology is not necessarily the most user-friendly, right? So that was the starting place. And now fast forward 3 years or 2.5 years, I was just at the Not Just Smarter, Faster Payments conference in San Diego a few months ago. And, you don't ask that question, whether, do you know what a stablecoin is? Of course, everyone knows. And the room went from having 40 people to being filled to the brim. And it was standing room in the back only. I was so happy to see that. And they were really asking the right question about application, tokenized deposits versus stablecoin, tokenizing real world assets, digital asset-backed mortgages and lending. So it was really exciting. And then on top of that, you had many more industry players. So back in the day, it was just me. Now you have Tron and Circle and all sorts of other people who are big players in the industry talking to them. So yeah, a long way of saying absolutely. The traditional finance background helped me speak that same language with them.
And then, Adrian, you're also the CEO and CIO of a family office. Do you see more and more family offices taking on digital assets and becoming interested in crypto?
Globally, yes. In the U.S., there's still that sense of, there's a couple issues here in the U.S. So there's regulatory uncertainty, right, which we're all working very hard to try and address. There is a sense that the hot, shiny thing, the new shiny thing is AI. And somehow all my energy should be on AI and everything that goes with agentic, and somehow digital assets get left behind. And then also, I think family offices in general, because they're built on legacy, they don't have the governance kind of baked into their structure that a responsible family office would need to have if they're really going to take a serious look at digital assets. The simple things like who custodies the assets, right? They're not built for that right now. But the cool thing is I've been going to speak at a lot of family office conferences, and more family offices are raising their hands when you say, hey, do you have exposure to this? It's just like the payment professionals. But back then it was like, what is this? Now it's like, okay, you need to have at least 5% of your portfolio allocated to this, if not more, 10, 15%.
Yeah, Adrian, I want to go back to something you said about your background. I don't get to talk to a lot of economists on this show, but like one of the things that I think we've talked about before is one of the sort of underpinnings of a currency, as you mentioned, when we go back to like shells and all these other things, and even like the Bitcoin white paper, is certain levels of like price stability. Mm-hmm. So obviously we see that in payment stable coins. I think Bitcoin maybe didn't fulfill the original thesis of being, electronic money, just given some of the volatility constraints, things like that. But how do you think about looking at the whole digital asset landscape now, and like what's working well as sort of payments? Like what impact do you think volatility has on what we're able to do with some of these applications? Like how do you think about that, just given the economist sort of lens?
So volatility is very problematic when it comes to currency, just currency, nothing else. The volatility has a place in this world, but and it all comes down to trust. I think people don't realize how important trust is to all of us in everything we do in our daily lives. Pretty much every interaction we have as human beings with other human beings is somehow at its core built on trust. So when it comes to digital assets, why does stablecoin work? USD peg stablecoin specifically. It's because there's an international trust in the US dollar. No matter what is going on in the realm of politics, the USD remains relatively stable, right? We talk about other currency stablecoins, other currency-backed stablecoins, and the first thing you're going to look at is whether there's volatility and whether you trust that government that's issuing that fiat currency. So to me, that's what it all comes down to. And I think even if you go back to the shells or you go back to the stones, there was a fundamental trust in the system. And then as soon as something happened that threatened the value of that currency, people lost trust. Same thing with Bitcoin at this point. There's volatility creates a loss of trust in a huge amount of people, and that's enough to be the beginning of the end.
Right. I think also something that I wanted to ask about on that front, though, is like trust is obviously something that's talked about a lot in crypto. And so from your position on the policy side of things, and then also through, the Digital Sovereignty Alliance, like how do you think about building trust when so many people who are not already in this space are kind of skeptical of it?
Yeah. But that's exactly what we're doing, right? If you think about it from a policy perspective, why are we on there why are we on Capitol Hill all the time in a suit and tie? I mean, I'll be honest, I'm not a big fan of any of those buildings. It's always like going to the doctor, but worse somehow. No, I mean,
sad.
you know what I mean? No offense to people who have to work there, but like outside of the heart building, which is awesome, everything else is just like, ugh. But we're doing it because it takes face-to-face meetings to have discussions and explain positions and listen to other positions and then build compromise and have respectful debate. All that requires trust. And it's best done in person. Now, the policy that we're trying to build or create is also about leveling the playing field and creating clear rules of the road so that we can bake trust into the system. So I don't just have to say, here, take my word for it if I tell you I've got this coin or this token. Just take my word for it. No, because I'll have to go through a process that has been vetted by third parties that I'll give you that sense of comfort that, yes, for example, this stablecoin is backed one-to-one with good quality cash assets, that my books are transparent and open and people can look at them and see where those assets are custodied. So it takes away some of the guesswork and bakes trust into the entire industry, if that answers the question.
How would you characterize the state of crypto policy today?
It's fantastic. I mean, think about where we come from, 2 years ago to where we are today. We were talking earlier. I've been an advocate for something called Clean Slate, which I can explain a bit more later on. But essentially, it's about regulating secondary market transactions around token sales. And the issue was, that was a complete gray area 3 or 4 years ago. Actually, even more recently, it kind of still is in a gray area until clarity gets passed, whether it's treated as a security or whether it's not. So the problem is, back then, if you were doing transactions, if the SEC says one thing, but you've been living under the assumption of something else, you're having a real problem. Now, if clarity gets passed and for example, Clean Slate, this language that we're trying to push through, I shouldn't say push through, this language that we're trying to get into the final bill that would bring clarity to what a secondary market token transaction really is. And what we're saying is it's not a security based on the definitions that they've put in. Then in that case, we shouldn't be retroactively punishing people for for what wasn't clear a couple years ago. Now Genius has passed, and in record time, I think the banking industry secretly is super pissed that we were able to get this through so quickly. And again, I don't mean that to throw shade on the banking industry. It's just they've been doing this forever, right? They've been lobbying forever. And so for us to be able to get, the industry to be able to pass legislation so quickly, they're incredibly envious, let's say. And on the other hand, I think we need to be a little bit more humble about the fact that, yes, we had a great win with Genius. But if you look at the way our government moves, no one says, oh, Congress is like incredibly fast when it comes to passing anything. Like that's the last thing people would say. So I think there's an expectation that clarity needs to get passed and needs to get passed right now. And if it doesn't get passed tomorrow, it's like somehow we're taking a huge step back. The way I look at it is these are complicated topics. We are very fortunate to have really passionate lawmakers on both sides of the aisle that are championing this on the Dems and the Republican side. I'm sure you've had people talking about the banking committee and how it was passed on a surprisingly bipartisan basis. That should give you a sense of encouragement as to where this industry and regulation currently is, where the conversation is. So I take a lot of I take a lot of encouragement at that, a lot of excitement. I think we still get clarity passed this year, and this Congress, sorry. We get clarity passed with this congressional administration. It's perhaps getting through the Senate in July, and then getting to the president's desk, getting through the House, getting to the president's desk in the fall.
Yeah, Adrian, I know we're going to dig more into that, but I want to ask you one other question just about clean slate and how it would apply to clarity versus some of the things that the agencies have been rolling out kind of themselves. So I know when the joint SEC CFTC guidance and that taxonomy came out, one of the things that the legal community was not concerned about, but is a concept we've talked about on the show before, which is this idea that essentially intentionally or accidentally created this idea of like no new promises is kind of what I've been calling it. And so it's kind of it, even just in that taxonomy, it's sort of clear that, all right, if you've hit escape velocity and you're out into this like ancillary asset space, you're good, but then it impacts the ability of projects to do new things. Like, do you think that we could get something closer to what you're looking for into clarity itself, or how do you see those kind of philosophies like working together?
So the answer is yes, and we have language to the extent that we can get some very minor revisions made into clarity as it's as we're trading paper between the Senate Ag Committee and the Senate Banking Committee before it gets to the floor. And actually, the changes are not that major. We're not talking about some of the other things we can. We're not talking about Section 604. We're not talking about ethics, where there are some real philosophical debate that needs to be resolved before we can get language in there. We're talking about just not punishing the past, people in the past, good faith actors in the past, for operating in a realm of gray before the rules were made clear. So we're not talking about fraud. Let me be clear on that. If fraud is fraud, and we're not talking about crime, then this stuff needs to be punished to the full extent of the law. What we're talking about, to give you one example, is if a token issuer distributed tokens and then I resold it, and that token issuer, for example, may no longer even be in operation, but it wasn't registered as a security. Now now I find myself in liability with the buyer, who may or may not have resold it again, and the chain of litigation can go on indefinitely. And this is not a hypothetical. This stuff is really going on. In many cases, that original issuer still is in business, and they are a good company. They're perhaps not the biggest company in the world. Maybe they're a smaller organization, but they were on the path to growth, and they were offering something with tremendous utility. But because of this gray area, now they're stuck. And I know Clarity, as it's written now, is offering what they call safe harbor, which, to me, that's a bit of a cop-out, because it's like saying, yeah, okay, we understand that something isn't quite right, but we don't know what the solution is, or we're not going to take the time to address it now. Well, that's just kicking the can down the road, and these people are still going to be languishing. And if I can, let me give you one other example, just because this is not like new. There's historical context for what I'm talking about, historical precedents. I came from the traditional finance industry, right, as we mentioned. And in 2022, Congress passed something called the LIBOR Act. And why was that important to me? Because in the private equity company that I was working for at the time, they were writing loan contracts that was based on LIBOR. The whole world was using LIBOR as the basis for determining credit and interest rate payments and things like that. And then it became clear that LIBOR wasn't necessarily wasn't the best way of setting this interest rate, and banks were manipulating what that rate was for their own self-gain. Well, myself included, as somebody who was in private equity, down to people who were trying to buy homes, but their mortgages were attached to LIBOR. Everybody was suddenly stuck, and there's a lot of people who were stuck in litigation. So Congress rightly decided, okay, we're just going to say, okay, LIBOR, anyone that was stuck in litigation because of a contract that cited LIBOR as the basis for this credit contract, they've replaced it with something called SOFR. And then going forward, they just kind of, were able to make that litigation go away. It just saved everybody decades of assay, for lack of a better word, and money, frankly. So this kind of thing we're talking about is not that it's coming out of nowhere, that it can't be done. Congress has done something similar before. It just takes the will to go ahead and do it. And you want to make sure that you're not losing the big picture. I don't want this to be the issue that prevents people from coming to building coalitions. And it won't, right? Ethics and Section 604 and all those other things. It just takes champions in Congress who can put this forward, argue the case, and reach a compromise.
Yeah. So this is just so I'm clear, Adrian, this is a proposal, the clean slate proposal is something that you're hoping to see get put into the final merge text of the Clarity Act.
Correct. And we've been doing a lot of work on this, and I'm happy to say that, and not alone. I mean, we've been working with a lot of the really incredible organizations out there, Digital Chamber, Blockchain Association, all of these incredible organizations that are doing a lot of work across the entire bill. But we have found open minds and open ears on this in those organizations, and so we're all pushing. We're all having these conversations with our Congress. We're having these conversations with the people we know in Congress who would be interested in this, who would take a position, that would share a position with us and help us get this into the final bill. And as I said, it's very minor language changes. It's not a major edit.
You mentioned the other hurdles that we've all been talking about: ethics, BRCA, merging the text between ag and banking. There are still some nits left to go through in the ag text, but do you think that we're overlooking the fact that banks are still actively lobbying on stablecoin yield? Because I reported recently that they're actually convening this is actually, apparently, I didn't know this, but state banking convention season. They're all at their state conventions right now, and they're all kind of trying to figure out how to lobby their senators and how to get the message across that they're still not happy with the stablecoin yield compromise. Do you think that the issue is going to reemerge as a key problem when the floor vote gets a little bit closer?
Man, hasn't it already? I mean, ain't that a kick to the teeth? Like, seriously. I don't know if this is a PG-13 show or I mean, I would have used different words.
Say whatever you want.
All right. I mean, noted for future reference. But honestly, like when Jamie Dimon came out with that self-righteous, sanctimonious nonsense, it really annoyed me because, here we are, Tillis and also Brooks and industry and honestly banking industry, traditional finance, we're all working hard on compromise language to get to a point where we can get this passed. And this has been going on for a long time, right? We were stuck with the stablecoin yield debate last year. And honestly, I wrote an op-ed last year saying we, as an industry, trying to tell the industry, let's give up the stablecoin yield. Let's offer this olive branch to the banks. Because those of us on the industry side, we know that this is not deposit flight is not the real issue here. That's often what they cite, but none of us believe that's the issue. And stablecoins, frankly, weren't invented for generating yield. They were invented for volatility hedging and crypto trading and then outbound remittances and all the other things. So to me, let's extend the olive branch, bring traditional finance into the fold, because at the end of the day, we can't really get this passed without them, and figure out how to move forward on this together. And it felt like that was a very unpopular position at the time. This was last October. But eventually, I feel the industry kind of came onto that side, and we were all working on this compromise. And then he just comes out of nowhere. Chase, look, they're the biggest bank in the world. So of course they're going to carry a lot of weight. And they had been quietly supporting this. They had been quietly saying, yeah, this is the way to go. And, their lobbyists were showing up on Capitol Hill in lovely suits and ties and in good faith sitting across from us in industry saying, yeah, we think this will work, et cetera, et cetera. And then just to do a 180 like that, it was very, very disingenuous. And there was the exact same behavior that they had been pointing the finger at industry and saying, you see, this is the way you guys act. It's not okay. You shouldn't be celebrating. You shouldn't be so vocal. You shouldn't be so mean, and all the other things that they would say. And then, here you are. It just goes to show you can't, look, it's like Game of Thrones on there, right? I'm not going to lie. This stuff it really is that way. So on one hand, very disappointing, a kick to the teeth, like I said, but also not necessarily the biggest surprise in the world.
You think
But it needs to be addressed.
You think it has a material effect on the number of votes we might see in the Senate on the floor?
Sadly, yes. The reason being, if you look at Genius and the senators on the Dem side that voted yes, the traditional finance, the banking industry, a lot of those states that they represent, the traditional finance industry is really entrenched, right? So, including also Brooks, right? Frankly, Maryland, for example. So I think it's going to be very hard for the senators to vote yes, who had voted on Clarity, who had voted yes on Genius, without at least taking it into consideration. I'm not saying that there aren't some really brave individuals out there. Again, I go back to also Brooks. I think what she did, she was incredible. I was so encouraged to see the work that she and Tillis had done together, and everyone behind it. I mean, both offices. So not to say that it's impossible, but of course, you'd be naive to say that the finance industry doesn't have that sway, right, when it comes to how our legislators will vote. And not nefarious. I mean, the banks are a huge part of our daily life, right? With that financial structure is important. So I'm not saying that there's some evil cabal in the background just trying to make this, make our lives miserable. But at the same time, for the same reason why, if you had asked me when Coinbase came out and said what they said, no one company should be large enough to be able to derail what is best for the entire country, for the people. So I think no one disagrees. Clarity Act is good for America. It's good for the American people. So we need clear market structure. Anything that gets in the way of that is disingenuous and counterproductive. We can have debate. We can discuss the content that will ultimately make it into the bill, but anything that's just in the way of progress isn't helpful.
Hey, Crypto in America listeners. The crypto companies leading this industry aren't waiting for regulation to catch up. They're building on infrastructure that's already there. SumSub is the verification platform powering 8 of the world's 10 biggest crypto exchanges. Global coverage, 1,400 plus supported documents, full travel rule compliance across 2,100 VASPs, and AI-powered fraud detection that acts before threats hit the blockchain. But it doesn't just keep you compliant, it helps you convert. With a seamless UX, reusable KYC, and tools like SumSub ID, you onboard more users faster and keep them moving. And with a no-code platform, you stay compliant from day one, no matter how regulations change. Download SumSub's State of Crypto 2026 report in the description below to get a clear read on today's crypto landscape and the practical moves teams are using to stay ahead.
On the front of the stablecoin yield deal, do you see it as a genuine compromise, or do you think that the banking lobby side of it ultimately got the better end of the bargain?
I see it as genuine compromise. And in fact, the fact that the banking lobby is still pushing back. Okay, so what they're pushing back on is what concerns me. We have this compromise language that you cannot earn yield on idle stable coins, right? Only transactional. That addresses the issue of deposit mimicry. So if there's concern that idle stable coins would take away from deposit demand for traditional banks. Fine. So I feel like we've put that to bed. It then seems like the traditional banking industry is coming back saying, well, we still don't trust you guys, and we think that you'll find ways, end run ways around it. Meanwhile, they're continuing to build their own stablecoin, right? They're continuing to develop their own technology. They're continuing to do all these things that show you they really believe in the technology. They just need this extra time for playing catch up. So that's where you lose trust. That's where that disingenuousness comes in. I had this conversation in Congress with another legislator, but my take is if we give up the stablecoin yield issue now and let the banks have their way, I guarantee once they have their shit together, 18 months from now, once they've got their stablecoin tech stack all ready to go and all sorted out, who's going to be back in Congress talking to legislators saying, hey, what would be a good idea? Yield on stablecoin. The banks will be right there.
It'll be genius when they say it. No pun intended. Yeah.
And with a straight face too, with a complete straight
Yeah.
face, like nothing happened. Unbelievable. So look, if I'm Coinbase, it sucks now, and I feel like they're come around, but it's like, all right, we don't get yield on stablecoin. Honestly, I think the banks are going to be doing your work for you in 18 months. They're going to come back and say, hey, let's get yield on stablecoin again because it's good for us.
I think we saw earlier this month, Zelle is doing a stablecoin now. And Zelle, I think, is run by the consortium of all the big banks.
Yeah.
Not a yield stablecoin, but still a stablecoin.
Yeah, exactly. Sadly, I equate a lot of this stuff. You ever seen that movie Alien versus Predator? Right? The tagline of that movie is, it doesn't matter who wins, we lose. Sadly, I'm a little jaded in this stuff, but I'm still optimistic in everything. But if the banks have their way, then we're facing a certain type of digital asset environment. And if the industry has their way, it's another one. I feel neither is necessarily in itself going to be the best thing for the industry or for America. It's precisely that compromised version, which is what we're working on, that will be fantastic for everybody. So if we lose that opportunity, then we lose.
Yeah, Adrian, I want to ask about the word disingenuous. So just going back to the Genius Act, something we've talked about on the show before, and you were kind of in the room and worked on language there when we were working our way through that legislation, is if we don't get clarity done, which I don't think that's necessarily the ultimate goal of banks here, but then they are stuck with Genius. And so I want to go back to that time and when that legislation was being discussed. Like, were the banks just phoning it in, or like just waiting for this opportunity they knew they were going to have down the road to rework things? Like, what do you think those conversations were like, and where that was coming from compared to kind of how we got here, just with all the sort of attached consequences and timelines and everything else?
As unbelievable as it is, I honestly think they were just phoning it in. That, like, legitimately the problem. Very few people in the industry, and I was alluding to this earlier on the call, very few people in the traditional banking industry took the time of day to really take crypto seriously and say, okay, this is something that's really, potentially coming to change the financial ecosystem as we know it. We better get ahead of it. I think they were waiting, particularly with the last administration. I think they had kind of written it off. And so when we did see banking lobbyists kind of in conversation with us, there was no one in the room. When you and I were talking, we're at Genius markups and things like that, they weren't there. It wasn't until Genius had already passed, and now we're talking clarity, and when suddenly they started to take an interest, and then they started showing up, in their really expensive suits and really expensive ties and all that. And started, having these conversations with us. So I really think they were just phoning it in on the back of thinking that it wasn't going to be an issue for them. They could just kind of put their head in the sand, and it was never going to happen. Big miss on their part.
Yeah.
Gerald mentioned that you were in some of those discussions. Adrian, you kind of helped develop some of the language that I think was ultimately used in the Genius Act. But I'd say we're seeing pretty much, it seems like every other week we're getting a new rollout of implementation language from the regulators. I think we saw something from the Fed last week. How do you think that's going so far? I mean, just from someone who's been so involved with those talks and kind of monitoring the legislation closely.
So I'm optimistic, and I'm happy with seeing a lot of the interpretation that's been happening post Genius and the way that the different regulators are coming together. I mean, you can take. What was the one? There was those 5 regulators that came together on consumer identification, right? Was it customer identification program?
Yeah, proposing new stablecoin rules requiring customer screening under the Genius Act.
Exactly. So the fact, I mean, it's complicated, but the fact that you have 5 regulators all coming together, agreeing on what needs to be done. Ultimately, that's, to me, a wonderful sign, because you don't want, You don't want people to have to go to 5 different regulators with 5 different interpretations when it comes to this type of stuff. You want the rules of the road to be clear, and that is exactly what we're seeing. So I'm optimistic about that. The stuff that we're seeing on tax, I think there's some work to be done there, right? Clearly, taxable income should be taxed. There's an argument to be made that we don't like it. You like it or not, I mean, no one likes it, but taxable income should be taxed. But operational movements, those type of things, take blockchain. If you're just moving money from one place to another, there's no taxable, what's the word they use? There's nothing there that needs to be taxed, right? So a little bit more work needs to be done on that side, but I think we're going in the right direction. It's not about less regulation. It's not about more regulation. It's about responsible, clear regulation, and we're heading in that direction.
So then what do you see as like ultimately the best case outcome if we're heading in that direction? And then maybe more on like a realist level too, like what is kind of okay, this is fine for us to continue moving forward?
So on clarity, I may have mentioned in the beginning, I forget, but on clarity, I think it's realistic to expect we can get past the Senate, we can get Senate approval in July. Mm-hmm. So maybe another week of negotiation. I know a lot of meetings going on this week, a lot of work being done between industry and legislators on those sticking points, ethics and Section 604. But let's say we can get to a reasonable place and get past the Senate. I think that's enough for this year, or sorry, not this year. That's enough before we break for summer. Then after we return in the fall, I know there's a lot on everyone's plate. It's a midterm year. There's a ton of stuff. But I feel that reconciliation with the House version will be a little bit easier as far as, because the Republicans still control the House, you are going to have there are points of contention, but it's not going to get stuck. They're going to have the political capital to get it through, and then it can get to the president's desk before midterm elections. I think it's not necessarily optimistic as of today. I think that's a very realistic take on where we're headed. And then the other state by state, other federal regulation, I think that stuff, as I mentioned before, is really progressing in the right way. I don't see any major issues right now. You can make the argument on a state by state basis that there are some states that might be taking the wrong approach.
Maybe Illinois.
Yes, yeah, I wasn't going to name them, but yes, correct. I think the way Illinois, in fact, the tax example I used before was in my head, I was thinking Illinois.
What do you think is going on there?
So Pritzker wants to be president, right?
Yep.
So, that's the first thing that comes to mind. Beyond that, sadly, this issue is still a political football. It just is, right? We can talk all day about what's best for America, but our politicians are going to continue to use every weapon in their armor, or every weapon in at their disposal to score political points, to curry political favor, and protect their political future. But ethics speaks to a little bit of that too. So that's probably what's going on. At the same time, there are, Digital Chamber has a state network. I know they are doing an incredible job on the advocacy front for better policy, correct policy. But look, if Illinois wants to shoot themselves in the foot, fine. I'm from Jersey, and I think are you? All right, yeah. Right on. So I was born in Philly. I grew up in Jersey. I have a Jersey driver's license. I'm optimistic about Jersey. I would welcome anybody to come to the Garden State and set up shop, and email me. We can have conversations about that. But yeah, so I'm less concerned about the state by state stuff.
Yeah, Adrian, I wanted to ask you before we started recording, and you just alluded to kind of some of this, but this will air the following week, but this week will be on the Hill with the Digital Chamber doing a fly-in. I know it feels like we're in, as an industry, like with all the trades and the White House and everybody else, we're in kind of like a full-on sprint mode here with just having these meetings, having these conversations. I know we've talked before about law enforcement going in a meeting on BRCA. This is kind of an overall more like tactical slash philosophical question. When you're engaging legislators at this point, where they've been talking to us in some cases for years about clarity, and I know they love seeing us, and the industry loves the Capitol Hill kind of photo op and all that. And we are showing up. What are some of the most like high efficacy things that you want to get out of these meetings as we kind of sprint here? Like, there's obviously like further education. Is it just consistency? Like, are there real opinions to shake out on some of these key issues? Like, what do you look for when you're in this like sprint mode engagement, knowing the calendar that we've already kind of talked through?
Yeah. A quote comes to mind, and I don't know who said it, but it's something along the lines of, hurry up, but don't rush, along those lines. So, yes, this is a sprint this week, and, a lot of us are sprinting on Capitol Hill. At the same time, what I really hope to accomplish is building trust at the end of the day. It all comes down to trust. And you can't rush that. Now, the good news is we've been doing this for, like you mentioned, many, many years. And that's how trust is built. Trust is built by us showing up constantly with no hidden agenda, being very open and honest about what we're there to accomplish, the positions that we take, where we stand, and then I think being willing to engage in debate, respectful debate with the other side. Sometimes it gets heated, and that's fine. But at the end of the day, we need to be able to look across at the person sitting on the other side and say, I've heard your arguments, and I'm taking them under consideration. I'm not dismissing them outright. And let me get back to you on that. Let me figure out how I can make that incorporate what I think is worthwhile incorporating, and give you reasons why I think the rest of the stuff needs to be left on the cutting room floor. Where you lose people are, the Senator Warrens of the world, and those people who just take such a extreme position. You know what they're going to do before they do it. They're not really helpful in this environment. I will say, at the markup, the Senate banking markup, I was encouraged to see Senator Warren cracking jokes. She was a little bit better at that meeting than I would have expected. So, maybe I'm overly pessimistic on that side, and there's hope even for her. Hopefully, I leave the door open.
Enter 40 amendments, right?
Yeah, exactly. Yeah. I leave the door open for everyone. Yeah. But I mean, so it's really I'm looking to build trust there. Yeah, we want to move quickly for sure, because there is a window of opportunity that changes. Everything changes if we don't take advantage. But not there to jam anything, right? I'm not there to ram anything down anyone's throat. The idea is these are the issues that we are getting stuck on. Let's figure out how to get across that. So, for example, tomorrow you and I are going to be on Capitol Hill at a congressional fly-in, right? Yep. I'm really there to listen to their arguments, particularly with the Democrats that will be meeting in the Senate. What are their main problems, with ethics? What are their main problems with 604? Besides the obvious, right? What are the main issues what are my blind spots? And then if it really is just going to be the obvious concerns, let me just re-articulate what I think is, what's really going on here and what's at stake, and, just keep reminding them that what is the price of failure, right? What is the rest of the world doing? What does this do to the American public? What does it do to the American image? And try to frame it in terms that will resonate with them a bit more. So the last thing I'll say about this is, when I go to Capitol Hill, I have the luxury of, yes, representing Digital Sovereignty Alliance, but we're actually not an industry organization. I represent myself and my team and the other members of DSA who will be there, but we have our own take that isn't influenced by one side or the other. I mentioned the op-ed that I wrote last October. I mean, wildly unpopular. If my job was to raise money from the industry, I would never have written that.
Yeah. What was the op-ed?
Yeah, well, and I'll share that with you. But basically,
quick side note.
We should. I think CoinDesk published it in the end. I'll find it. But basically, I was arguing that we should give up the stablecoin yield debate and offer the olive branch to the financial institutions. But I think the positive side to that is, when I'm meeting with legislators, they won't look at me as just purely industry. I am there with industry, and majority of the time I will agree with industry because of, we're all trying to have the same goal, but it's not all the time. So the one advantage I think DSA has is, many, but one of the main advantages is that legislators will come to us when they want to talk to someone who's neutral, a neutral ground. And it's the same reason why I think the banks are quite willing to talk to us as opposed to the industry organizations, because they saw us as just being neutral. Here's a guy who just has an academic interest and comes from the industry, but he's on that side saying, I really like the stuff they're doing, maybe we should listen, as opposed to this person's coming with an agenda and I already know what they're going to say before they open their mouth kind of thing. So working with the industry, I think, hand in hand to get where we need to go.
Yeah. I mean, we haven't talked about Tron or Tron DAO more specifically throughout this recording, so we really want to get into that with you too. It's
Sure.
like, obviously, the network has become increasingly more active in U.S. policy discussions. From your perspective, leading that effort, why was it so important for Tron to have a seat at the table in Washington?
Tron is one of the largest blockchains, especially when it comes to payments, right? And if you look at what is the main use of stablecoin, right now it's still payments and outbound remittances. And Tron is, like I said earlier, is the dominant player in this industry. So if we are trying to talk about what is the right policy that's going to impact this payment industry and a new payment rail, it'd be irresponsible to have these conversations without Tron, without Tether, without these other organizations that are basically offering a new payment rail as a service to millions of human beings around the world. I think the numbers are over 300, almost 400 million user accounts on the Tron blockchain, and about 25 billion in daily transfer volume. And the best part is around 65% of all that is all those transfers are under $1,000, right? So we're not talking about a whale network. We're not talking about just moving massive amounts of currency for unknown reasons around. We're talking about real usage, real retail usage, real existential alternatives for people who live in developing countries where they may go to bed and their salary that they're earning is worth one thing, and they may wake up tomorrow and it's suddenly worth 20% of it, right? And they have to worry, they have to go to bed. None of us have to deal with that. We don't go to bed with those kind of concerns. Tron, as the payment infrastructure, as the payment rail that kind of underpins this whole thing, is giving them an alternative. So DSA was established independently, just myself and a couple of other, I would say, academics, college roommates of mine, friends, that shared this intellectual curiosity about this. But I think when word of our work got out to others in the industry, we started seeing a lot of support. Tron has been very supportive of what we do. Certainly not the only organization that has been supportive. Axie Infinity is one of the largest on-chain gaming companies, right? I mean, they have a stake in this for sure, although not necessarily as direct as Tron or Tether, these other ones. But they've been incredibly supportive. And one of the other things that we do on the education front is we are offering virtual case study classes we piloted it at St. Andrews, we piloted at St. Andrews Episcopal in Maryland, so for rising seniors in high school. And we brought in a Harvard Business School professor to teach a case study. And one of these case studies is going to be Axie Infinity. And the cool part is, so you've got this case study about what the business is and what they do. If you remember, they were at the time the largest hack in the industry. I think it was like $500 million or something like that. I mean, Jeff Zalen, one of the co-founders, he's a young guy. I mean, he's about to go on stage. He just got the word that the company just lost $500 million. I mean, what does that do to you, and how do you respond to that? What are the leadership lessons to come from that? So these are some of the things that we want to get across. Teach the case study, and then at the end of it, you have Jeff Zalen come on and answer questions about what he was going through his mind in real time. So we are offering those types of opportunities, I think, pretty unique in the industry. That it's just about education and about learning and figuring out what are the real use cases, and then using that to inform policy, using that to inform the interpretation of what we need to do here in the U.S.
Yeah, Adrian, I want to ask about a topic that was pretty big, I think, at the beginning of the administration, and then as we got kind of the legislative wheels turning, has become less of a point of focus. But you just reminded me of it, talking about like Tron DAO, or even some of this volume that you're talking about is non-U.S. and onshoring of the industry was such a big focus when we have such a globally distributed sort of network of companies and counterparties and entities and all these kinds of things that have been set up elsewhere. Do you think we're going to get back to a path for some of these organizations to operate more onshore in the U.S., or is that like a topic for another day? Like, how do you think about the way that conversation needs to develop, given all the historical context of the industry, sort of thus far?
Absolutely, and this is one of the best parts of what I think the work that we're all doing is we want to bring that innovation back onshore. I mean, take Axie Infinity, the example I just cited. They actually had they had a problem just like everybody else in the industry with that last administration, and so they were driven offshore. I mean, Jeff is an American citizen who, as a result of legislation by enforcement, had to move everything to a friendly jurisdiction. So this stuff, again, is not hypothetical. This is not, I don't need to convince you guys or your listeners. Everybody knows this stuff is real. So one of the reasons why we're working so hard on clarity is because if we do it right, it will allow that innovation to come back to the States. We just level the playing field so that we're not working against these companies. We are making it so that they can come here and operate with confidence and operate with respect and with the full extent of the law, working within those guardrails. And absolutely, I can tell you, Tron, for example, is also increasing its U.S. participation. Through, and I'm not as involved in their commercial side, but I can just tell you, I think anything that you can see, it's available online. Tron is preparing for that day when clarity passes and the rules of the road are clear and set in stone. And not just them. I mean, Tether has already, U.S. Tether was established last year, specifically designed to comply with all of the U.S. Rules and guidance that came with Genius. And those are just two examples. There are many people who are going to be coming back. And the other part is those startups that have brilliant ideas, but because they couldn't, it wasn't clear. Because the rules weren't clear, they weren't able to get funding. They weren't able to bring their ideas to life here in the U.S., and then they had to go outside to keep that dream alive. That kind of stuff will be gone. So we're working really hard on that part. Clarity passes, rules of the road are clear, family offices, institutional investors, all of it, the whole environment works. And then we're going to see, I think, magic happen. It's the best part. People ask me, what are the use cases of crypto or stablecoin and stuff? I tell them, besides the obvious, the best part is the stuff that we don't even know yet, right? Because the innovation is there, but people are too afraid to put it out, right? Until things are clear. So that's what really excites me. I'm super excited for the future.
Adrian, you mentioned Tether too, but Tron and Tether both have faced pretty significant scrutiny over the years. But how has that affected your efforts to engage with lawmakers in Washington? Has it been more of a headwind as opposed to an opportunity to sort of educate them about how maybe these companies have changed and how they're coming onshore, or their efforts to come onshore in the U.S. in at least the last 18 months or so?
No, actually, surprisingly not. The way I would highlight it, or the way I would sort of explain it, you have those lawmakers who have an axe to grind, and you know who they are, right? We mentioned Senator Warren. They tend to be the ones who are on the extremes, and they have their constituents that they represent. So that's fine. I understand, why they do what they do. But in the middle, the people who are really looking to get progressive legislation passed, They understand that we really just need to be focused on the policy, and that a lot of the stuff that happens outside of it is noise. And that noise, you can put as much attention as you want on it, but on Capitol Hill, I have not actually faced any negative headwinds based on any of the stuff that you read in the news. In fact, the exact opposite. I hear a lot of positive coming out of the T3 FCU initiative. And the great people at TRM Labs have been very vocal about the work they're doing, and they've been on Capitol Hill. They've tested, Ari Redboard has testified in front of Congress. He's considered an expert in this field. And so the amazing work that the T3 FCU network has done, we actually have a great time educating those legislators that aren't as familiar with it. But we've come across, the word is out. I mean, I think we've come across almost every legislator we've met with is familiar already, because there was such a concern, right, that crypto was reserved purely for bad actors, right? Then 2 years ago that was the thing. Oh, it's really only for scams. Well, T3 FCU and after 400 or 450 million in illegal assets seized, and in many cases returned to victims, something the banks can't do when fiat currency is gone. That kind of stuff is it's real educational, it's really informative, and it's the right type of innovation and an industry and law enforcement cooperation that I think grabs headlines and that people are gravitating to.
Adrian, I know we've covered a lot of ground today. Really appreciate it. I want to not go. I guess we can. It's whether clarity passes or not. But just going into the midterm year, as you mentioned, like what are you expecting out of this fall in terms of whether crypto becomes stays at political football, becomes less of an issue for folks to really rally around or campaign on. But what are you looking ahead for in the midterms?
It's interesting that the crypto industry has become incredibly influential in a way that, let's put it this way, I don't see a lot of anti-crypto folks out there, beating the anti-crypto drum on the campaign trail, because they know that's counterproductive. Now, that to me, that's really good for two reasons. One, I'm a believer, and so I think that if you're beating the anti-crypto drum very loud, chances are more likely than not that you are, you're playing that political football. Really, you're not taking a good faith look at the arguments. So I'm really glad to see that stuff kind of fall by the wayside. The other thing I like is worst case scenario. If we see clarity not get passed this year and then get pushed to the next Congress, I firmly believe that it's not the end of the world. It's not great, but it's not the end of the world. Clarity still passes. We just have to keep working on it again with a new Congress. And I mean, we're going to have to go back to the drawing board on a lot of the stuff, but it won't be such a fundamental shift from where we are today. Because if you see the way the Dems and Republicans are working together in good faith in the Senate and the way they have done in the House, that's what gives me hope that no matter what, we are in a good place as an industry. I think a lot of people forget that. So I have people that I want to support in the midterms for a whole host of reasons, for a whole host of topics that are important to me. Crypto is one of them. It's certainly not the only one. But I don't have to make that compromise anymore. The good news is I don't have to choose between someone who's pro crypto and pro something else, and now I have to figure out, but anti crypto, and I have to figure out which one to support. All the right candidates are pro. You just have to find the ones that are also going to help us move the needle, no matter what.
Adrian, before we let you go, we always like to ask our guests, what's something else you're watching that you think our audience should be paying attention to that we haven't covered in our conversation today?
Well, World Cup, but I'm sure our audience is probably watching it right now and not listening to this. They'll watch it next week. I am super excited to see the development of streaming payments. And when I say streaming payments, I'm talking about like daily or weekly. There have been organizations that have been running pilot programs, and I'm considering adopting it myself in some of our companies that will do streaming payments in digital assets and stablecoin. And so employees no longer have to wait till the end of the month to get a paycheck, right? They don't need to wait even to 2 weeks. We could be talking about you show your productivity on a daily basis, the very next day you get paid. Or hell, instantly, right? You're online being productive, your salary is streaming into your account that day. It opens up a whole nother can of worms as far as like financial literacy and making sure you can balance your budget and that you don't go spend the money on something and you have enough money to pay your rent. But that is, to me, an incredibly democratic future for us. And if I can say one other thing that it just dawns on me, we've been doing a lot of work on, because I mentioned financial inclusion and financial literacy. So we've been doing a lot of work at DSA on the financial literacy piece and how do you use digital assets to make better financial decisions. And I think there's a real opportunity there for us to help the younger generation who are finding it difficult nowadays to make ends meet. And I think they're more and more feeling that lack of hope and optimism for the future. I really believe digital assets is the key to being able to bring that hope back and unlock that sense of optimism for my financial future. As we mentioned at the top of this, the financial assets, digital assets gives you that financial democracy. It gives you that access. But access without education is a bridge to nowhere, right? So financial inclusion without financial literacy is access without empowerment. And so you really need both. We've seen a lot. We've been doing a lot of work abroad in Africa, in Southeast Asia, in South America on this topic, and we're just starting to see people pick it up here in the U.S. and ask for some guidance. And so I'm super excited about that. I think the future is super bright.
Great, amazing. Well, Adrian, thank you so much for coming on today.
Thank you guys very much for having me. This hour went by really quick.